In this session, let us understand what is Rule 72. Rule 72 will help you to find out the period that is taken for doubling an investment. That is, if you invest let's say 10,000 rupees, how long it would take for that 10,000 to become 20,000. Okay, rule is very simple. Divide 72 by rate of interest. If I invest, let's say, this 10,000 rupees at the rate of 8%, how long it would take for this 10,000 to become 20,000? It is simple. 72 divided by 8. 8 means 9 years. 72 divided by 8, 9 years. Instead, let's say I'm going to invest at the rate of 10%. If I'm going to invest at the rate of 10%, then it is 72 divided by 10, then it is 7.2 years. If I'm going to invest it at the rate of 12%, then it is 72 divided by 12, 6 years. Okay, so that's what Rule 72 says. Divide 72 by rate of interest, you get the number. That's nothing but the period which is taken for doubling that investment.